Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's Thursday, the 22nd of December, and we have our regular Thursday guest, David Kuo, founder of the Smart Investor Singapore. David, good afternoon.
Selamat pagi. I'm actually in London at the moment, Brian. So it's
I
Selamat
know
pagi
you've got
here.
a lovely virtual background down there. What's the weather like in London
Who says it's
today?
virtual? Who says it's virtual? Have you seen this background before? Yeah, you're right. It is virtual. It is virtual. My house in the UK doesn't look anything like this. The weather here is very, very cold, Brian. It's around about sort of 0 degrees at the moment, so it is quite cold. Yeah, that's
Okay.
all I can say. But for me, Brian, anything less than 30 degrees is cold, right? So when you get down towards the zeros, it's unpleasant.
Now, David, before we get your insights, let's take a look at Roundup and see how Asian markets and cryptocurrencies have performed in the first half of the day. We've got Bitcoin, which is at 16,848. It's up 0.32%. Ethereum is at 1,213. It's up 0.56%. Now, looking across to the regional equity markets, we start with the Straits Times Index. That's up 0.58%. Bursa Malaysia is up 0.11%. Shanghai is up 0.27%. The ASX All Ordinaries is up 0.55%. The Nikkei is up 0.5%. The Hang Seng is up a whopping 2.83%. And rounding up the numbers, we've got the Kospi, which is up 0.82%. Now, David, this is a big change from the normal David scenario when David appears on the show. It's a sea of green today. Tell us why.
Maybe it's because I'm not in Asia at the moment. Maybe I'm in the UK, so maybe the market gods are still looking around for me. But now that they found me, maybe the markets might turn around. No, I think essentially what's happened is that there's been a bit of follow-through buying after a surge on Wall Street last night. So we saw the main indices in America rising about sort of just over 1%. The Dow was up about 500 points. The Nasdaq was up about 1.5%, and so was the S&P. So a bit of follow-through buying, and we'll probably sort of talk a little bit about why there is some follow-through buying. But obviously, when you have a look at the Asian indices, Hong Kong is a standout. I mean, Hong Kong is up 2.5% at the moment, whereas the rest of Asia is around about sort of 0.5% higher. And I think everybody is willing the stock market to go a little bit higher before the end of the year, just to sort of round off what they hope will be a Santa rally. But like I said last week, Brian, I think Santa has already gone home. So I don't think we're going to get much of a follow-through buying after this, Brian.
Now, I think one of the key things with the Hong Kong, perhaps we could explain it by the fact that authorities have pledged support for the real estate industry. So I think if we take a closer look at the numbers, we would find that some of the related stocks in that sector probably were contributing to the surge in the Hong Kong index. But the US stock rises are obviously quite mind-boggling, David. What are your thoughts on this? Is there irrational exuberance in the market right now on that sense?
I don't think there is any kind of irrational exuberance, but I think there's probably a couple of things. The first one that people were looking at were the results coming out from Nike, second quarter results, and also from Federal Express. And these are kind of bellwether barometers of the US economy. And Nike came out with results that were better than expected, or not as bad as people thought it was going to be. And of course, FedEx also came through with good numbers. So people are saying, hey, whilst on the one hand, when you look at the share price, it's actually based on two things. First of all, it's the earnings multiple, and the second one, it is the earnings per share. And what they're saying is that maybe the earnings per share from some of these consumer facing companies aren't going to be as bad as people thought. So maybe, some people are jumping into the market, but I think if you have a look at what is going to happen next year, earnings are going to be very challenged. The other thing, of course, Brian, is that maybe a lot of people out there have been shorting shares because they thought that the stock market is probably going to go as far as they think it will. So they shorted the shares. And then when we had these results come out from FedEx and also from Nike, they suddenly found that they were caught with their trousers down, and they had to jump into the market very quickly and start buying these shares in the stock market. And that was probably what was driving the stock market rise, which is probably why when you have a look at Asia over here, the response hasn't been that great apart from Hong Kong. It's been sort of relatively muted, but we'll take what we can at the moment, Brian.
Now, the other news really this week was the unexpected move from the Bank of Japan. Now, the IMF have called the latest Bank of Japan move sensible. What are your thoughts on this at the moment?
Well, the thing is, I mean, Japan was actually swimming against the tide. I mean, whereas the rest of the world, the rest of the central banks around the world have been increasing interest rates, Japan has been holding interest rates and sort of saying that we don't really sort of need to increase interest rates because there is no inflation in the system. And then lo and behold, they actually find that there is inflation in the system. And the central bankers, including Mr. Kuroda, are going, oh my goodness, we're going to have to do something about this. So what they've effectively done is to acknowledge the fact that there is inflation in the system, and inflation is quite dangerous. And so what they've done is to sort of widen the band as far as their interest rate policies is concerned, giving them some wiggle room in case there is going to be bad inflation. And I think that really is a warning sign for everybody around the world, and that is that inflation is definitely there. Inflation is going to bite us all on the nose. And not only the central banks need to take corrective action against inflation, but we as consumers need to do exactly the same thing. And the one thing I want to stress, Brian, is that the inflation that you feel and the inflation that I feel are two completely different things. So don't just have a look at those official figures that come out from governments. I'm not saying that the governments are misleading us about inflation, but what I'm saying is that your inflation and my inflation are two different things because we lead different lifestyles. And so therefore, I may feel inflation more than you do, Brian, but none of us can be too complacent about inflation at all.
Now, the other thing that I missed that earlier when I mentioned it was the reason for the rise of the Hong Kong market is not only due to the fact that they pledged support for the real estate industry. PBOC injected 157 billion yuan into the banking system. That, and coupled with the fact that South Korea's production prices rose to lowest level since April 2021. As we go into the new year, David, what is your sense in terms of how this movie is going to play out?
Well, I think if we have a look at the PBOC first, I mean the People's Bank of China, they're pumping liquidity into the Chinese economy simply because I think the Chinese economy is in trouble, and it is in a huge amount of trouble because previously they had encouraged a lot of people to go out there and buy property, and people had the kind of expectation that property prices were going to carry on rising regardless, only to find that when property prices suddenly started to turn around and property prices started to fall, they were expecting the government to step in. For a while, the government hadn't stepped in, but now it is stepping in, and is coming in through the PBOC, the central bank, into the local banks. And the local banks are then trying to sort of pump money into people's pockets to go out and start buying property again. I think China recognizes that its economy has somehow shifted. It's no longer going to be property related, but for now, what they're going to do is to try and make sure that people's personal wealth isn't in any way damaged, because you and I know, Brian, that a lot of people's wealth are tied up in bricks and mortar, particularly those people who go out and buy houses. And when you suddenly see your house prices falling, your wealth, the kind of wealth effect that you feel, is not going to be as great, or in some cases, it's going to go into reverse. And that can make people feel very, very angry. And the last thing China wants to do at the moment is to anger its people, just as they had to do a U-turn with regards to COVID. They're kind of trying to prop up the property market right now. And as far as Korea is concerned, well, I think it's telling us something that maybe their biggest customer, China, is not going to be as good a customer in the future. Things are going to change, and I think the landscape for the world is going to change in 2023. But we'll talk about that a bit later on, Brian.
Now, David, On a different note, thank you very much for your insights. We'll talk about that in our year-end wrap-up show next week. Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.